What is going on, everyone? Another exciting week in the markets is behind us. This is what we did last week with what I bought, what I sold, what I added to, and why I did it. First of all, let's take a look at the last week. So important economic events we had on Tuesday, the ISM services PMI report, which came in better than expected. Then we had the JOLTS opening, which came in better than expected. US FOMC minutes, nothing new there. They just counted the optimism words of Jerome Powell. Check that out on the internet. But on Friday, we had the non-farm payrolls and Michigan consumer sentiment. So the good and bad news was that the payrolls came in better than expected. It was forecasted 160K, and actually US added a 256,000 new jobs, and that is in the month of December. So this is looking backwards. Okay, so let's get into our portfolio. What we bought, what we sold, and why we did it. So let's go on sectors. Let's first of all say we closed a couple of positions. We closed ExxonMobil, we closed CrowdStrike, we did hold it for a long while, and we closed Uber. So you can also see here the buying prices. So ExxonMobil, which is basically a oil and gas company, we closed our position. We bought it not long ago, and we bought it with 104, and this is euros, and we closed it with a small profit. The problem was that I was seeing oil. We have oil here. So this was the problem. Oil was getting pretty much overbought. Actually, I was already preparing here for selling, and had a jump back up, and that is where I sold my only old position, which was ExxonMobil. Actually, I should have bought Diamondback Energy on FANG, ticker symbol FANG. This should have cut me much better. So right here where it was oversold, I should have bought it. I would have had a much better game from this. But I just got a couple of points back there on Exxon, ticker symbol XOM. As I said, close that position. So let's move on to CrowdStrike. CrowdStrike is a cybersecurity company which basically operates in the aerospace system. Remember back then when CrowdStrike had a little oopsie on their update and the entire thing just crashed? So this is where I bought it. I also sold here a bit of my position, and now it's goodbye CrowdStrike. So you can see here 253 euros. So let me just do here a quick calculation. 253 euros, that was $238 back then when I bought it. That was my price with my buying price, and we exited here at roughly 340-ish. So back to 348, roughly $356. So CrowdStrike, ticker symbol CRWD, had a good run. We are seeing here either a consolidation of the price, and we are seeing here it's a long-term sell signal triggered, and I'm afraid that this is going to sell off. CrowdStrike may sell off. I think they're waiting for how they're going to be punished from their consumers. Those are the airlines, because they have huge losses due to CrowdStrike, to their update failure. So at the current time, I'm closing my position to CrowdStrike, and I just raised my cash position in order to invest in something else. So please stick around to the end so you're going to see what I did with that money. Also, I closed Uber, ticker symbol UBER. I closed that position. Uber always was a trade position for me. It took it here a little bit of sell, or the RSIs was actually starting to weaken here, and this could go up. So maybe next week we have a huge rally in the stock market, and this could go up. But for the moment, I saw a much better opportunity. I'm going to talk about that opportunity at the end of, not at the end, but I'm going to get to my positions, my buying and adding positions, and I'm going to show you where I stick that money. Okay, I also reduced the following positions. GE Vernova is one of, well, we want to bet on AI and then go back into the supply chain. GE Vernova is a child of General Electric, and they're basically working on grid. So GE Vernova, I reduced the position just a tinge from 16 shares to 14 shares. So currently it is a 3.2% of my portfolio. And if this has a good pullback, currently I'm up 18.13%. So if this has a good pullback, I'm definitely going to add back to GE Vernova, but I didn't need the money. Also, I reduced from Visa, ticker symbol V for Vendetta, actually just V. So ticker symbol V, Visa, it's on a strong sell signal here. I don't know what is happening with Visa. Maybe. So I heard a couple of interesting theories. Let's put on our tinfoil hat and let's think about it. So if they would really consider a strong digital dollar, then Visa would have problems. So the Trump administration was talking about Bitcoin, and I don't think they're going to use Bitcoin, but they're going to use some sort of digital dollar to make payments more simple. Also, the Fed, which uses Fediment, already uses that payment system, which is almost instantaneous. And because Visa and MasterCard are there's a duopoly actually, they could get hit hard. Although this is the dividend, well, not king, but they are growing their dividend strongly each and every year, and this could become one of the best paying dividends companies out there. For the moment, I reduced just one share. I sold only one share, so brought down my Visa position 1.93% of my portfolio. So let's see, first of all, what new position I opened and to what position I added. So I opened one single position, and that is, of course, to Nvidia. So Nvidia is currently in a big on a sell signal here. It actually could go even lower, although I do hope that next week this is going to turn around. And honestly, Nvidia for now is for me just a trade position. So the investment is 33 shares. I have a total investment of almost 5,000 euros. That's roughly $5,127 currently. So it's not that big of a position. It's a 3.17% of my portfolio, and I'm currently down roughly 4% in that position. And also not seeking that much of a gain. So if this explodes, I'm going to book, sell it, and take my profits and go into the sunset. Now let's talk about what I added. So I added to following, actually not, yeah, 2 companies and 1 ETF. Of course, TLT, my biggest holding in my entire portfolio, is almost 20%. Maybe it's not the best idea to have that huge of a bond position because I'm in my late 30s, almost 40s. So I'm in my late 30s, and having this much bond position in my portfolio is definitely not recommended for a person in my age. So I increased the Treasury Bonds, the TLT. Normally, if you would buy this on any kind of US trading platform, you will see it as TLT. That is the ticker symbol for this. But I am in Germany, so I have the IS04 as a ticker symbol for this Treasury Bonds 20 plus ETF distributed. So I'm getting my 4.89% yearly if this position does not go anywhere. I'm currently even down 0.93% on this position, so almost 1% for the position. But this is the biggest position that I have with already 30,000 euros invested in this position. Again, this is a counter trade. So if the stock market goes down, I expect the position that the stock market goes down because of because Nvidia draws down the market or something like that. No. The entire stock market goes down. If sentiment goes down, if something happens and people want to run to safety, this is it. This is where they're going to run to. And it was so massively oversold here. Not massively, but it was oversold that I just couldn't resist. This is why I sold Uber. Although Uber could have, my target was 4 or 5 more percent in Uber, then I would have sold it. But I needed the cash to invest. So I increased this position to 19.13% of the portfolio. And I believe I was at 16. And I have to look back. So if everything goes according to plan, or everything goes according to plan, then in the next 2 years, I would expect to have a 20 to 30% gain on this position. If not, I'm going to get 8% on this position, roughly, because I know that yields are going to go down, so I'm not going to get that high of a yield. But as soon as the position increases, the yield is going to go down. So this is inverted. Okay, so if treasuries decrease the yield, the 10-year treasury and so far and so on, then this value will go up. And if not, the decrease, then I'm going to get more yield on this. So if currently I'm going to get 1,420 euros and 60 cents on this position if I hold it for an entire year. In 2 years, I'm going to get $2,800 and so on and so on. If not, it's going to decrease. So if this is going to increase, I'm going to get even more money. If this is going to decrease, that is going to increase. And believe me, this is going to go to free. I'm going to get 10, 20% easy on this position. So Treasury Bonds, 20 plus years distributed. It also has a non-distributing ETF, but this is the one I'm buying because I'm either going to get the distribution or I'm going to get the increase in share price. And I have to take a sip of coffee because this is one of my biggest positions and I just love it. It's safety for my portfolio. Okay, next stock that I added is Constellation Software. So Constellation Software is a holding company that buys, manages, and builds vertical softwares in the software industry. A couple of interesting things. So this is first of all a Canadian company. Then it has a very small dividend. Let me just it's a 0.13% dividend. So you won't buy it for the dividend. It has an EPS of 40, very big. It has a market cap of $90 billion and it does not dilute their share price here. So pretty interesting company. I don't remember, let me just check it here, if they ever had a split in their stock. So it's really expensive. You can see it says $4,275. Let me just check if it ever had a split. I cannot see any kind of split. And this is a really old company. It's from 2000. Okay, not that old, 2006, but it never split its price. So in my opinion, one of those companies, as soon as they have a dip, buy them. This is not financial advice. Remember, I'm not giving here financial advice. Always consult a financial advisor when you want to buy or sell stocks. I'm just doing this for entertainment purposes and for educational. And that education is my thought process. So you can throw it in there in the comment sections and hit on it if you want. So Constellation Energy, I added one share to this position. It had a really good dip here, and I said, woo, let's go, baby, let's go. This was a perfect opportunity for me to buy a little bit more of Constellation software. So Constellation software, ticker symbol CSU, with now a 5.33% of my portfolio, increased by one share, and I'm currently down 58% in my portfolio with a 8,565 euro investment. Next up, added to Adobe, ticker symbol ADBE. Massively oversold Adobe, still in a sell position, but with products like Photoshop, Premiere, building their, I know this is not Nvidia, they're not building AI chips, but there's a lot of possibility for Adobe to come up with software where AI will really increase your productivity. So massively oversold, expecting a bounce, expecting even to be a really good trade in the next couple of months here. If not, I'm wrong. The investment is 12 shares, a total of 5,000, roughly 5,000. Yes, with I'm down 8.61% of this in this position. The current weight of the position is 3.07% in my portfolio. The current a total investment of 5,000 something euros, and I'm expecting to get easily 10 to 15%. So this is not a long-term investment. It's really short-term lived. I do expect a much more bigger pull down into Adobe in order to invest into it for a longer term. So this is basically a short-term trade, not a long-term investment. There are no short-term investments. They're only long-term investment. Okay, now let's do a risk assessment for the next week. Last week, I did a risk assessment, kind of resulted a 50-50%. And basically what happened, some positions went up, some positions went down. I did take some profit in those positions and added to a couple of weaker positions where I do see opportunities, of course. So let's move on to, why is this smaller than this? Mysteries of my updates. I already did an update to my Wealththumb application here because I'm working on it personally. When I find the time, of course, and constantly see a couple of mistakes that I did in my code. Okay, so let's do a risk meter here. By the way, the portfolio is now up at 155,000 euros, and I have a current yield of 2.49%, which will result in a yearly yield of 3,036 euros if I don't change anything in the portfolio. Okay, so let's do a risk assessment. Let's go to the S&P. Currently, the S&P is in a sell, so a MACD sell, which I would say is a low risk in the stock market for the next week. Then we have the RSI at a 38-ish, 39, looking lower, so I would even say 38, which again would be a low risk, but not a very low risk. This could go lower. Let's go with 25% risk in the markets currently. Is the market oversold? Well, let's just head over to a whole diagram in the market. We are sitting currently at the 100-day moving average, and it was pierced, but the market jumped up. So the 100-day just grabbed the market. I would say this is a good correction in the market. So we're going to test it. So if there are two possibilities here. If I believe there will be a bounce. So if this would have had the possibility to go even lower, it would have done it. But there will be a bounce. So if that bounce holds, then we're going to have a good rally in the market. If not, then this could go even lower, and we're going to take into target here our 200-day moving average, which currently sits at $5,572. So the S&P Standards and Poor's is currently 500 is currently on the 100 moving average. Now, what is this? I would say that currently we are in a medium risk in the market. Again, it pretty much depends on what is going to happen next week. Is the market going to hold or not? A very negative sentiment, I would say, is the fact that there's a small myth in the market that if we have no Santa Claus rally, so Santa rally cancelled, which I would say it's a high risk in the market, and we also have had the first 5 trading days of January then negative. And this is actually a high risk in the market, not a very high risk. So if the entire month of January will end off negative, then we're going to have a bit of a problem, because most of the consensus or most of the stats in history shows us that if January is negative, then the entire year will be well, not a good year. Doesn't have to mean that we're going to see a down year, but we could see a volatile year, and we most likely won't see another 20-ish% return year. We could see a lower than 10% return year, which is actually normal for the market. But also let's take a look at the economic events that we are heading into the next week. So we're talking about the week from 13th to 19th of January. So we have PPI for inflation rate expected to come in at 0.2 month to month and year to year. Year to year should be 3.3. Then we have retail sales, building permit, and housing starts. So really eventful month, economic events, which represent a risk in the market for a even further downfall. So I'm going to stay here a high risk, and we are at 54% 8.17. One last thing, this is the very last week before the inauguration. The presidential inauguration of Donald Trump, president-elect, is on the 20th of January. So the market could rally next week into the inauguration and then sell off, or it could sell off next week and rally the week after this into the inauguration. So I just don't know. And also, as you can see here, everything that I'm typing in is just resulting in, again, in almost 50% of risk in the market that something bad could happen. Actually, we are at almost 55%, so the risk is even higher. There's never zero risk in the markets, and there's also never 100% risk in the markets. It's always if something happens, what will you do? This is why I bought my treasuries. I'm not buying any puts or calls on or shorting the market next week, but I am cautious. I'm cautious on what could happen in the markets because I have a couple of signals here that the market could sell off. Okay, so with this being said, thank you so much for watching. Please like and subscribe. I'm Nova BM. This was Wealth Down, the weekend edition. Catch you next time, which is from Monday to Fridays, and then again in the weekend edition. See you later. Bye bye bye.